morning, everyone. My name is Clopas Masara.
Good morning, Chairman and honorable members. My name is Lara Tumaku. I'm the head of the landscape and landscape chairman.
Good morning, Chairman, and good morning, members and colleagues. I'm Patience Kipara. I'm the Executive Director for
Thank you so much. The honorable members and the colleagues, the purpose of this meeting is for us at the Portfolio Committee on Budget and Finance to get an understanding of the operations of capital markets. As I've already alluded to, we have invited the critical stakeholders in the operations of the capital markets, and you would want to understand the performance of the capital market in Zimbabwe, any policies that you think would promote the development of the capital markets, if there are any policy gaps that you've identified, and any recommendations that you may make. So before you come in with your intervention, whatever you're going to say is going to be said under oath, because we expect you to present the truth and nothing but the truth. So those who are leading the different institutions, if you feel that maybe one of the members who are not at the front here may end up contributing, they should also take the oath. I may want to give reference to my brother, Mr. Justin Boni. In case you may want to refer to your colleague from VFX, if you feel that he may end up saying something, then he should also take oath. So it's only those who have taken oath who are going to speak. So if you can go ahead and take oath.
I, Enmo Tarwinga, swear that the evidence that I will give is the truth, the whole truth, and nothing else but the truth. So help me God.
I, Raina Mageni, swear that the evidence that I will give is the truth, the whole truth, and nothing else but the truth. So help me God.
I, Norman Maferefa, swear that the evidence that I will give is the truth, the whole truth, nothing else but the truth. So help me God.
I, Justin Boni, swear that the evidence that I will give is the truth, the whole truth, and nothing else but the truth. So help me God.
I, Colin Tafmani, swear that the evidence that I will give is the truth, the whole truth, and nothing else but the truth. So help me God.
I, Prosper Torogodo, swear that the evidence that I will give is the truth, the whole truth, and nothing else but the truth. So help me God.
I, Robert Mbayo, swear that the evidence that I will give is the truth, the whole truth, and nothing else so help me God.
I, Nema, swear that the evidence that I will give is the truth, the whole truth, and nothing else but the truth. So help me God.
I, Nyarat Nabo, swear that the evidence that I will give is the truth, the whole truth, and nothing else but the truth. So help me God.
Thank you so much. So we move on to the next stage where the institutions are going to make their submissions. I've already mentioned that the purpose of the meeting is for us to get a brief from the various institutions on your understanding with regards to the performance of the capital market in Zimbabwe, the policies that you think can engender the development of the capital market in Zimbabwe, any gaps that you have identified as an institution, and the recommendations that you are profiling to this committee so that we can move that as part of our development agenda. Honorable members, we have discussed these issues, the stakeholders, I'm sure they've also deliberated on this, that in order for us to be able to shape policy, we need to engage you. You are the people who are at the forefront, and the engagement that we make as your portfolio committee will then assist in shaping policy. What we want is a capital market that is robust, a capital market that aids to the development agenda of the country. We know that the government has launched the financial institution policy, and we would want in the capital market to mirror the performance of the economy. So I'm going to start off with the presentation from Chengete Zai, Depository Company. And for us as honorable members, we are going to respond basing on your presentation. So honorable members, we are going to take notes, and then when the presentations are done, then we should be able to ask the relevant questions that are in line with the brief that we have sent to the various institutions. So it's over to you, Mr. Toro.
Thank you, Honorable Chair, and thank you, committee members. To start us off, I will take the opportunity to also introduce Chengete Zai Depository Company itself, just a brief background, 1 or 2 minutes. Then I will go into the details of our presentation. So, yeah, to start us off, Zimbabwe's capital market serves as the lifeblood of our nation's economic growth, and a thriving capital market facilitates the flow of investment capital. I will not be reading maybe verbatim because we will share this presentation maybe later, but I will then touch on some critical points as we go through. By providing a secure and efficient platform for raising capital, the market unlocks Zimbabwe's full economic potential. However, unlocking this potential requires a concerted effort to address current challenges and embrace new opportunities. So the presentation is an update on the market, highlights the critical areas for improvement, and proposes recommendations to create a more vibrant and competitive capital market going forward. Chengete Zai Depository Company itself is the central securities depository for Zimbabwe's capital market. So Cheketedzai actually is the CSD, also connected to the Zimbabwe Stock Exchange. Cheketedzai is a quasi-government organization with a collective ownership through of 48% through government-related entities. Our next slide will expand on that. Our core function is maintaining an electronic register of securities like shares, bonds, and derivatives. So by facilitating the electronic clearing and settlement, Cheketedzai aims to reduce the risk for market participants, improve efficiency in trading, and make Zimbabwe a more attractive destination for local and foreign investors. So this is the shareholding for Cheketedzai. You have NASA with 19.99%. There is First Transfer Secretaries with 15%. ZB Holdings with 15%. ZSE with 13.24%. Grouchun Investments 10.53%. CBZ holds 12%. And also minorities that they may make up the difference. So we go to the crux of our presentation. The Zimbabwe capital market has experienced a complex and varied performance over the past 5 to 10 years. The stock market has been suppressed for a protracted period due to high volatility, economic instability, hyperinflation, and the currency fluctuations that have contributed to significant market volatility, liquidity constraints, high tax burden, and high trading costs. I think on these ones we can always go into details as required. Recent events, the introduction of the Zimbabwean gold, the zinc, is a positive development and potentially is likely to attract companies to raise capital on a stable local currency. So the last few weeks, you will notice maybe starting from April itself, there was barely any trading for the first 2 weeks of April. But as we went over to the third week and fourth week of April, trading then picked up. And this has continued to increase up to the point where we are, where trading is really now maybe ended what is called a bull run for the last few weeks, fueled by renewed investor interest. So one of the key aspects that ignited maybe this investor interest was the revision of the capital gains withholding tax from 4% to 2%, and also the removal of the vesting period. There was a vesting period of 180 days, wherein if you sell your shares within the 180 days, you then attracted a withholding tax of 4%. So now that has been removed, and it has actually spared the market to greater levels of performance. The only drawback is that this provision is temporary. It's 6 months. It's going to last for 6 months and then revised. Our recommendation maybe on that aspect is that maybe there be some sort of permanence. A large number of investors that make the difference on our capital market are long-term investors, and they would actually want to know what will happen beyond the 6 months horizon with respect to the capital gains and all the taxes that are involved. So on the next one is local bonds and debt market challenges. The introduction of the Zimbabwean gold dollar is a positive development, potentially attracting companies to raise capital on the stable market. Previously people didn't indicate that, why would I raise Zimbabwean dollars on the stock market when in the process of raising that capital it's actually losing value. So that maintenance of value by the Zimbabwean gold is a positive indication that perhaps it's now the right time for people for serious investors to actually be doing that capital raising on the stock market. Overall, the market has challenges. in attracting new listings. I think this one will leave for the other players to present on. Debt market also remains sluggish with a limited attraction of local currency investments. Several companies also migrated from the Zimbabwe Stock Exchange to VFX, seeking capital in a more stable currency of USD. Next one is promising developments in dematerialization. A lot of counters on the CSD are actually approaching 100% in terms of dematerialization. You can see that Pro Plastics there at the far left is actually now at 100%. OK Zimbabwe is actually also approaching that. It's at 99%. So quite a number of counters have taken up to the electronic form of registers and encouraging even the investors themselves to be dematerializing their shares and keeping this on the CSD instead of keeping the paper certificates. So there is a recommendation also on this one later on, like what has happened in other markets, like in Botswana, I think in Tanzania, where the regulators and in fact the lawmakers saw it fit to say, going forward, let's have all shares being electronic and sitting on a central securities depository. So what this does is that it cleans up the registers for a number of institutions and also opens up, say, for scrutiny. Say if you are looking at public companies that hold these securities, you can now easily ascertain the amount of shareholding that they hold in certain counters. I think later on we'll go into details on that. In terms of settlement, maybe starting on in April 2024, in ZIG, the total settlement for the portion that was settling on Cheketezai was 31 million ZIG. So that was quite little and could barely even cover the running costs of the CSD. In May, there was an improvement, a doubling on the April trading values. In June also, there was another increase, but July to date, as of today, or as of yesterday, we're actually at 130 million. So there is that upward trend in terms of trading values and even volumes going forward, which we hope is going to be sustainable. Proceeding maybe to the focus areas for policy action. Number one is strengthening the regulatory framework. So on that one, our focus areas that on consistency and clarity. Once there is consistency over the long term, people can then be able to really plan with that in mind and not have reservations to say maybe this change, these policies that have come in are short-lived. It might actually catch us off guard, and then we might actually lose a significant amount. So in terms of the details, because of the time limit, I will not really go into details, but what we'll do, we'll share this presentation. Enforcement and compliance. So effective enforcement of regulations is crucial, and this requires strengthening the capacity of regulatory bodies to monitor and ensure compliance, imposing appropriate penalties for violations, and maintaining high standards of corporate governance. Investor education, this one is quite critical, given that currently there is maybe that gap wherein a lot of investors are not really up to scratch in terms of the operations, especially of the current electronic market. You will find a lot are still keeping their shares as paper-based. And that investor education, although it's actually happening, maybe some resources significant resources need to be channeled in that area, so that as a market really we have investors who understand how the newly set up electronic market operates. Number two, there is enhancing market efficiency. On top, there is the infrastructure improvements. You know that investing in modern trading platforms and technologies can significantly enhance market efficiency. Efficient and reliable systems reduce transaction times and costs, thereby attracting more participants. For us at Chengetedzai, we are happy to say the system that we use is actually a AAA rated system in Europe, developed in Sweden. It has actually wide use in Europe itself, in South America, and is actually coming up even in Africa. You'll find that Botswana then also actually adopted the same system that we are using after doing a market survey worldwide. They then choose the same system. So system-wise, we are actually happy to say it's one of the best systems. The only drawback maybe there is that the system is not being really used to its full capacity. And for that, I think there are other points that will then give a clarity in terms of that. Number two on that one is reducing transaction costs. Lowering fees and costs associated with trading can make the market more accessible, like what recently happened. This includes reviewing and potentially reducing all the other fees, but also weighing that against the cost of operating the systems, like I indicated there. You can't then reduce costs to beyond where the systems themselves can no longer sustain themselves, and where the system operators can no longer keep up with the developments. You know, in terms of technology, changes are quite frequent and significant. So you have to be constantly investing in your systems. Market depth and the liquidity, encouraging the participation of more companies and financial instruments can deepen the market. Policies aimed at attracting new listings and fostering secondary markets and enhancing liquidity are vital. In other markets, for example, in South Africa, they have actually now established secondary markets that have really excited the market. And this is a way that we could also go of encouraging secondary markets, not just for your securities, but even for government, not just for shares, but for even government securities as well. Facilitating foreign investment. So on this one, I cannot overemphasize the need for easing restrictions on capital flows and ensuring the repatriation of profits so that we can boost foreign investments and liquidity. Focus areas for policy action again, bolstering investor protection, transparent information disclosure, and the fair treatment of investors. This one is implementing policies that ensure investors are treated fairly and equally is crucial. Dispute resolution mechanisms, establishing effective and accessible mechanisms for resolving disputes between investors and market participants, fraud prevention, strengthening measures to prevent and combat financial fraud is essential. This involves enhancing regulatory oversight, improving detection methods, and imposing stringent penalties for fraudulent activities. So on our recommendations, as we close off, number one, like we indicated earlier on, a mandatory dematerialization of all listed securities will actually go a long way in enhancing market functions, and also in particularly to do with the transparency and the regulatory oversight. Because once that is done, the CSD becomes the final and authoritative record for all your portfolios. So if you want to know how much NASA actually holds in listed counters, you simply go to the CSD and say, can we get that printout? So now there is that breakdown between the physical and the electronic, and you wouldn't really know. Some would prefer to just hold their holdings as physical, so that it then becomes very difficult to ascertain the holdings per investor. This has happened in Botswana, in India, and also in Tanzania. In Zambia, when we visited, I think it was early May, they are also actually in the process of enacting certain provisions so that there is that mandatory dematerialization going forward. Alternatively, is the requirement that key institutional investors dematerialize. So your public companies, NASA, pension funds, insurance companies, and other public companies could be mandated and required to dematerialize their securities. So this will also improve security and the market confidence. Financial support for market infrastructure. Yeah, given that there is this requirement for the market to be as cost effective as possible, but on the other hand, we want our capital market infrastructures to be sustainable. Maybe there could be some assistance just for the financial key market infrastructures in terms of affordable foreign currency funding to support critical activities that develop the capital market. Precedents exist in other countries where CSDs are government funded and or supported by institutions like World Bank, IMF, and so forth. This investment would foster a more robust capital market infrastructure, ultimately benefiting the Zimbabwean economy. And by the way, when investors look into the Zimbabwean market and look at the ratings by international rating agencies for the various market infrastructure, that rating will not just be for the institution itself, but also cascade to the economy as well. And global investors would actually look at those ratings as part of their determination to say, do I move my funds into Zimbabwe? What does Thomas Murray say about the rating of their CSD? What does Thomas Murray say about maybe the cybersecurity standing of key market infrastructures in that economy? So it's good for the economy, apart from also sustaining the key market infrastructure itself. Capital markets participants require fiscal support for implementing new products in the system-related costs. So we propose the following specific recommendations to strengthen the regulatory framework. Number one is faster legislative response to market challenges. When a change actually affects the market, perhaps there is need to be faster in the way that we respond to the dynamic environment, so that the market deterioration does not end up eroding the gains that would have actually been made in making the market stable, and also in terms of the market confidence that would have been accumulated. Balance the legislative response. Calibrate legislation to manage speculation without harming long-term investors. You know, when you look at the market itself, speculators form a very small component of that market. But somehow you find that now precedents or legislation is actually crafted to manage the small group of speculators. At the same time, you're actually having the institutional investors, the long-term investors that would actually have sustained that market. So in the long term, then you actually dissuading the serious investors from participating in the market, because you're actually lumping up everyone. you need to then segregate to say this one can't be a speculator, but then there are certain quotas that are prone to speculative behavior, and that need to be managed maybe in a more focused manner rather than to then punish the entire market as a whole. Virtual assets. This one is an area where maybe Zimbabwe will then be pulled into participating, whether we are willing or not. So as a nation, maybe there is need to really start to align our legislation with current international trends to prepare Zimbabwe for the future of finance. Because whether you like it or not, then people could actually be participating on Bitcoin, on Ethereum, on your digital currencies from external jurisdictions, even if they are actually in Zimbabwe. So as Zimbabwe, we need to really also participate and ensure that we are not left behind. This could attract new investment and position Zimbabwe as a regional leader in this innovative financial space. Review capital gains tax calculation. So on this one, as I've already alluded to, the current CGT is now at 2%. So this discourages investors to say those that actually used to enjoy the 1.5%, they now are going to face the 2%, which is higher than the rates in other competing markets. If you look in SADC, your CGT of 2% is actually much higher than the markets that are around us. Review CGT calculation method. This one, I think, I will not then be going into further details. Investor protection levy. This one, I think, it needs now to cater for what? For even supporting the market participants in terms of cyber security. So reallocate a portion of IPO funds to enhance cyber security preparedness of key market infrastructures to further strengthen investor protection and market confidence. So as we finish, we also recommend a reviewing of depository levy. Currently it's at 0.1%, which is very, very low, even when you compare it to regional markets that are actually enjoying government support. So for us, we are then proposing that maybe a small increase to 1.5% would somehow ensure sustainability of Chengetedza's operations and to continue development of the capital market infrastructure. Because when you look at highly skilled staff, we are actually competing against the rest of the economy. Once you cannot pay competitive salaries, you are assured that people will run away. So to enable us to keep skilled staff, we will then propose a slight increase to 0.15%. Stamp duty. We are saying stamp duty is traditionally on marketable securities is traditionally verified a transaction authenticity. With electronic trading, the need for for stamp duty is diminished. So we recommend that you consider removing or significantly reducing stamp duty. This would reduce transaction costs and make the Zimbabwean market more competitive. Onboarding of government securities for secondary market trading. If you compare the performance of government securities in markets like in Tanzania, on the Dar es Salaam exchange, you will find that a lot of income is actually being generated by the public participating in the secondary market trading of government securities. So this is an area that maybe needs to be cultivated for the long term. A vibrant domestic market for government bonds would facilitate infrastructure project financing and attract investors, institutional and foreign, to enhance government transparency and liquidity. So this one, that's the recommendation. So in conclusion, we are saying a thriving capital market is essential for Zimbabwe's economic growth, and by implementing the right policies, Zimbabwe can create a more attractive, efficient, and secure capital market environment. By focusing on key areas, Zimbabwe can create a more robust and investor-friendly capital market that supports sustainable economic growth and attracts international and local investors. Investment lawmakers must prioritize these improvements to close existing gaps and foster a healthier market environment. And Cheketeza is committed to partnering with government and other market participants to unlock Zimbabwe's full economic potential. I thank you for your time and attention. Thank you.
Thank you so much, Mr. Robert. I'm sure you also qualified to be a politician. I'm sure you heard him when he said to conclude, to finish, finalize, because I go to the last page and the final recommendations. So, no, yeah, thank you so much for the informative presentation. And I'm sure honorable members, some of us, maybe it's the first time to hear about Cheketeza. I'm not sure if you were aware of Cheketeza. Yeah, but Cheketeza, they operate securities depository because in Zimbabwe is a securities market. And from what we picked up from the presentation, the main item on dematerialization, that we need to move away from the use of physical paper to electronic. Yeah, so as we transition to the other submissions, I would want the regulator to be the last one. I'm sure as you make your presentation, you will be able to respond to the other issues. So let me give this opportunity to Zimex. Fintech.
Thank you. Thank you, Honorable.
So just try to make sure that you pick up the most important points.
Sure.
10 minutes or less.
Thank you.
So I'll be 5 by then.
So firstly, to introduce FinSec, Financial Securities Exchange is registered as an alternative trading platform, which is recognized as a securities exchange. So we have the main exchange and then the alternative for alternative securities that may not be ready for full listing on the main exchange. We currently have one equity listing, which is all mutual empowerment shares, and then a few derivatives securities, and we're in the process of listing collective investment schemes. FinSec also operates the commodity exchange, which the Honorable Chairman has referred to, which is Zimbabwe Mercantile Exchange, ZMX, which has also come in to facilitate trading of agricultural commodities. Again, within the group, we have also been working on the automation of markets by introducing mobile trading. Some of you may have come across the concept of C-Trade that allows people to buy and sell securities on their mobile phones. In terms of the scope of the submissions, I think our understanding was it was just a performance of the capital markets in general. So we've looked at performance from two angles. The first is in terms of just looking at what is positive about our capital markets. I think our capital markets, compared to other capital markets, have performed quite reasonably well. Our indices have experienced growth, and our automation, the automation or sophistication of our capital markets has also been fairly good compared to our peers. So there is quite a lot of innovation in Zimbabwe in terms of systems. The automation is making the capital markets efficient, effective, and secure. And we have rarely had serious, major, catastrophic issues like failure in the capital markets in recent times, owing to the innovation and the resilience of the platforms that we've been building. Our capital markets have also witnessed very robust product innovation, and we have really been championing the introduction of new products in the markets that our peers, countries of equal stature, actually can only be learning from us. However, that is on the rosy side, but in terms of the challenges experienced on the negative side, our major problem is that our capital markets are useful for a couple of functions. The major one being capital raising to enable entities to raise patient capital. And our capital markets have been found wanting in being a platform that facilitates capital raising, and that has been a big handicap. So all the positives that we are talking about will be circulating around the very same listings, the very same issuances, and the very same investors, but we are not growing in terms of new capital being raised. It is a long time ago that we had very exciting capital raising activities. And anchoring that problem is our muted capital formation. So we just survive on the existing capital, but we are not really having new capital being formed, and new fresh liquidity that will come in that should be able to also cover the capital raising of new enterprise that will be coming. We have witnessed a decline in the pension sector. Pension funds are declining, and pension reports make sad reading, and that should be an indicator of our situation when it comes to having capital that should be available for business growth. Our savings side of things is also very poor. The savings culture has been going down generally. And here we are not talking about sophisticated savings or sophistication in terms of white collar people and all that. The generality of our population hardly has savings as a top priority in their agenda. So it is very worrying, this generation, when we get to retirement, the generality of our population, when it doesn't have savings, either formal in terms of pension scheme or personal savings are not being generated. So we have a problem right now in terms of having liquidity for funding projects and all that. But we also have a future problem of a population that will not have any savings for when they start retiring. Participation of the generality of our economy or our population in capital markets is also very low, with 1% having awareness or any participation in capital markets. And that cannot help us at all. Then we have also witnessed a lack of investment banking. Back in the day when our capital markets were thriving, we had banks that were specialist investment banks. And you know that your capital market growth is based on a specialist investment banks. Now investment banking has now been reduced to a small desk in the maze of commercial banking. And with an economy that wants to grow and it doesn't have a specific investment banking industry, then the growth is definitely under threat. Then we have had very little activity in terms of our debt market on the capital markets. So again, if we are burdening our people to come into the capital markets to only invest in equities and even these new products, REITs, ETFs and all that, they are very complicated for the ordinary person implementing these mobile trading platforms. When they are investing, they will ask you, when would my investment mature? So if it is a share, we are not talking of maturity. So the way you can introduce the public to the capital market is to give them investment products that guarantee them a challenge in terms of growing the capital market. So these are the sort of major challenges that have not already been covered that I thought we would share with the committee. In terms of the policies, where do we see some gaps in terms of the policies? Again, it speaks to the challenges that I have mentioned, not having a centralized debt marketplace, fragmented. Some are with the central bank, some are OTC and all that. So policies that are not very clear in terms of how debt markets in Zimbabwe must be structured is a gap that needs to be closed. There is not enough incentive in our policies to encourage domestic savings. And if we are looking at the majority of the activities, economic activities being informal, and no robust policies are being made to ensure that we bring that informal economic activity into the formal system, then the chances of us harvesting savings from that economic activity are very low. No clear policy on financial investment education, and the policy stability matters like short-term policies are also quite detrimental to the capital markets. This one is a difficult one, but I think exchange controls that are as stringent as ours are also very difficult for capital markets, because when you are trying to compete for capital and you are now unable to eloquently explain how foreign investors can get in and exit easily, then you are on a sort of at a disadvantage, because we are competing with global investors. Slowness and reluctance to embrace digital assets. Digital assets and digital finance is, as my colleague stated, is inevitable. And what we do not want is to do it on a forced basis because everyone is doing it, but we need to be at the forefront. We think the slow pace or slow progress in listing state-owned enterprises at a policy level is also something that is drawing us back in capital markets. In other markets, for example, in Kenya and all that, in very difficult times, the state-owned enterprises, when they go into the capital markets, they actually instill more confidence. It's easier to have someone to market an IPO for Tier 1, for example, than to expect people to understand a very private, unknown entity and brand that nobody is actually working with. Why don't we list the entities that are actually involved in people's day-to-day lives? That way, that people will understand what capital markets are all about. If we are leaving it to a small entity that is unknown, then people are scared. Then the last one has also been mentioned. Our taxes and transaction costs are always giving us challenges. So the last section is just to sum up on the proposed policy interventions. Firstly, centralized bond markets. Secondly, stimulate.
You are left with 2 minutes.
Thank you. Stimulate investments by giving tax incentives that encourage people to formalize their economic activities and save. Then clear policy guidelines on digital assets as soon as possible. Abolish, or if abolishment is extreme, at least enhance and improve exchange controls, just so that they are very friendly to capital markets that bring in long-term patient capital. Then come up with a deliberate calendar of listing state-owned enterprises, and let's continuously improve on our transaction costs and taxes. Thank you, I submit.
Well, thank you so much, Chapmani. The honorable members, I'm sure we are following quite a number of issues probably a significant presentation. I'm not sure if you are also going to allow GFX also coming. I think we are very much interested. You remember last time when we said they are cannibalizing the Zimbabwe Stock Exchange. Probably they are here to represent themselves.
Thank you, Chair. A lot of the issues that have been raised by my two colleagues, a lot of things are common. So what I wanted to do was more big picture situation. So who are we? We are two exchanges, the Zimbabwe Stock Exchange and the Victoria Falls Stock Exchange. The Zimbabwe Stock Exchange is over 100 years old, so it's been around a long period of time. VFX started around 2020. My colleague will talk more about VFX. I think just to explain to the committee why what we do is important. So I think the first part is that what happens on the Zimbabwe Stock Exchange and on the Victoria Falls Stock Exchange affects everyone in this way. So if you got a pension, most likely up to 70% of those assets are on the Zimbabwe Stock Exchange and on the Victoria Falls Stock Exchange. So if the Zimbabwe Stock Exchange goes down or goes up, it affects the money that you get at the end of the day. So it's what we do is important that way. And the second thing is a lot of the big companies that are in Zimbabwe, like Delta, OK, Simbisa, are listed on our exchanges. So it's very important that all the big companies, most of them, are listed on our exchanges. And in terms of foreigners, so what happens is when foreigners want to come to a new country, they look at the exchange, see how it's run, see how sophisticated it is, see how liquid it is, see the rules and regulations before they decide to come and invest in the country. So it's important what happens on the stock exchange in terms of attracting foreign investment. So in terms of the bet, so the number that most people use to see how good your exchange is as a percentage of GDP. So the countries that are very sophisticated and do well, your value of your stock exchange is a multiple of your GDP. So it could be 100%, 120% of your GDP. Ours is low, it's around 8 to 10%, it varies, but it's a low number. So which means that our market is not big enough and sophisticated enough. This is something that all my colleagues spoke about. There are various reasons why that is happening. But I think in my mind, the biggest factor in terms of your capital markets to grow is you need a stable currency. Let me repeat, you need a stable currency. A stable currency is very important because it allows people's savings to remain stable over the long period of time, so they will trust the capital markets. It allows companies to raise money, and so therefore it grows the capital markets. So a stable currency is very important in terms of the development of the capital market. And the second part is that government plays a big part in terms of growing it, give it a big push in two parts. I think my colleagues spoke about it. The first part is in terms of debt. Our government is one of the few in Africa, even Southern Africa, that doesn't raise money through the capital markets, through the stock market. And it's something that should happen. It helps a lot in terms of the growth of the capital markets. Then the second part, I think, as my colleague said as well, is in terms of listing some of the state-owned enterprises onto the capital market. So that's very important. Then I think the last part that I want to talk about, which is important, is policy consistency. And there's not much that we can say about this, but to repeat that when there's no policy consistency, it makes it very difficult for people to trust your capital markets. The capital markets tend to be a long-term thing. People are not thinking about 1 year, 2 years, they're thinking about 10, 15, 20 years. So they need policies that are consistent. So if we don't have policy consistency, it makes it very difficult to grow your capital markets. I think let's not just talk about the bad, let's talk about the good. I think over the past 3, 4, 5 years, maybe 10 years, we've done better. We've done better in terms of new products. We've launched quite a new products in terms of REITs, ETFs, CFDs. We've launched new markets. There's VFX, there's MX. So we've done quite a bit in terms of launching new products and new markets. And there's been new listings in the country like Caledon Sonia, Caro, etc. So there are things that we've done very well. But I think in terms of the big picture, I think the three that I just want to repeat: stable currency. Without a stable currency, it's very difficult to grow the capital market. Without government intervention in terms of debt and new listings, it's difficult to grow the capital markets. And I think in terms of policy consistency, without policy consistency, it's difficult to grow the capital markets. I think that's the big picture.
Thank you so much, honorable members. I'm sure you are hearing it. Mr. Justin Boy, the vibrance of the Zimbabwe Stock Exchange requires a stable currency and policy consistency. I don't know if there is any submissions from VFX. I know you double up as you said, yes, and VFX.
No, I didn't need to say
Good morning once again. Thanks very much. I think just to add, just a few people to understand what VFX is all about. VFX is 100% owned by CLSC, and it has, the government is 32%, and private individuals, including members or stockbrokers, own the balance, which is 68%. So just like an exchange, the VFX came as a result of specific statutory instrument 196 of 2020, which allowed it to trade exclusively in USD and in other hard currency. So to date, I think we have noted an increase in terms of uptake and appetite for listing. I think just reiterating Justin's point on the basis of stability of the currency, where we have seen a new people showing interest, and also have new listings which have really come on board. Over the last 3 years, we've moved from 1 security to 15 securities, and that's the growth that you're seeing on that side. But there's just to add in terms of obviously the things that we think can assist us in terms of attracting new listings. If you look at one of the incentives that has been put, which is increased output, additional output, which is a 100% retention on export proceeds. That incentive had a huge effect in terms of benefits to the companies. You will see companies undertaking more projects. So such incentives will also help companies that are seeking capital, and more importantly, to increase production at company level, and that has downstream effects in terms of bringing new projects on board. It also helps companies to bring new projects on board. But for us, I think what we have not seen in the market is where we think the listed companies, for the fact that they are available for public scrutiny and they are listed on the market, we have not seen incentives that perhaps are critical for them to be scrutinized and also to increase their capacity. So, for example, you just apply a same tax rate. We believe that as you want to have more people companies come on board, incentives that help them to reduce their tax, even if it's a slight tax advantage, it is important because you are subjecting these companies to listing. But just to also focus in terms of the other areas where we think there could be capacity. If you look at like dual-listed companies, we have to incentivize those that are currently not listed but are listed in other markets. And these are local markets. We need to incentivize them to be able to get incentives that help them to make sure that they also come and list and make sure that our pension funds, all of us, this government, can participate in those projects. So it is key. Like now we are also seeing gaps in terms of the IPPs. There has to be incentives that help them to attract, raise capital on the market. So we believe some of the policies that can help us to move from that end to ensure we do have companies that are gonna help in terms of electricity generation and also connecting the exchange. So we think that that can help us as markets, but overall we are seeing a positive projection, and we are happy with the progress that we are seeing in terms of new products on the VFAs. Thank you very much. That's my suggestion.
Thank you so much. So let me transition to Mr. the CEO of the Securities Exchange Commission of Zimbabwe, who is the regulator. I'm sure as you respond, there are also quite a number of issues that are directed towards you as the regulator. I'm sure your response will also assist us in terms of what we want to achieve. Capital market that is good. So
Thank you, Honorable Chair, and thank you, Honorable Members, for the opportunity. I think I would want to start by appreciating the committee for giving the industry an opportunity to come and present. I do quite believe, as I was listening to the players, and that is probably the men and women in this room that can make a difference as far as the capital markets are concerned. It reminded me of where we are going as a country. I think we are aspiring to achieve Vision 2030. And that vision, Honorable Chair, requires a well-functioning capital market. You know, we as a country have got competitive advantage in areas like mining, agriculture, and we tend to focus more of the energy towards those areas. I would want to challenge the honorable members of parliament to also develop that mindset that we can build a competitive capital market, and we also need to diversify as a country and look at other areas that will take us forward. The challenges, Honorable Chair, and where we are have been shared. I'll also try to probably just do a big picture overview of the industry. I think the players have tried to highlight the importance of the sector. And as far as the country Zimbabwe is concerned, I want to build from that. As a third unit, honorable members, the number of players in the capital markets stood at 225. So today we only have got 3 participants, FinSec, CDC, and ZSE. But as a third unit, we had 225 registered entities that play a service in the capital markets. I think just to demonstrate how diverse the capital market is. A big number of those are collective investment schemes, which stand at about 82. Collective investment schemes, honorable members, are our products and agents that mobilize the retail market. You might be familiar with the concept of unit trusts. Those are part of collective investment schemes. But the reason why that product is not as prominent as it used to be is the challenges that have been shared by the players. We also boast quite a big number in terms of financial advisory, but with an inactive primary market where there's no listings, that category has also been the one that has been largely affected by license cancellations. They do thrive if we have got new listings. And since my experience in the capital markets, since as far back as 2004, I don't think we can count more than 10 IPOs that have happened since that time. A market where we have no new listings is not a good market. I think with the number of sectors that we speak of and boast of, a very vibrant mining, agricultural sector, and new FDI coming into those areas, we should have more IPOs. Those are the indicators of a healthy and vibrant capital market. Like I said, I won't go into the challenges and issues of performance, but just to highlight, Honorable Chair, the significant turn of events that we've witnessed this year. The first 4 months were quite terrible for the capital market. I'll share the numbers. In terms of value traded, you'll notice that first quarter, we had a decline of about 58% in terms of trading because of the currency issues that we were facing until the 5th of April. Post 5 April, when we introduced the ZIG, which is more stable, more predictable, and allows investors to make investment decisions. We have seen that situation significantly turning for the better. Honorable members, I think as we speak, I'm advised by the ZSE that for the month of June alone, the ZSE index is up by 60%, and that is for July alone, not June, for July alone, the ZSE index up northwards of 60%. So the combination of a local currency which is stable, introduced on the 5th of April, and statutory instrument 110 of 2024, which was published on the 28th of June, have been the major significant, major contributing factors to that turnaround. SI 110 removed vesting period of 180 days, suspended capital gains tax, which had been put at 40%, and also lowered capital gains withholding tax. That was at 4% to 2%. All I'm trying to demonstrate, honorable members, is that with the right incentives, the market can definitely respond in a way that is positive. In terms of regulatory gaps, which have also been highlighted, I would agree, honorable members, that we do have regulatory challenges in our sector. I think it's to do the framework in which our regulations are made. And our industry is quite unique. For ZSE to introduce a product, they have to come up with rules. Those rules have to be approved by the Commission, they have to be approved by the Ministry of Finance, and they have to be published in a government gazette, which means they also pass through the Attorney General's office. And that process, unfortunately, at the moment, makes it a long-term play for us to come up with a new product that is approved. It takes a long time for that whole process to be finalized. This has also then affected even the amendments that we were seeking to do as a securities exchange. We wanted to amend our Securities and Exchange Act, Chapter 24-25, to incorporate the new products, to incorporate new ways of doing business. But we have been at it, I think, since 2019. And up to date, we are yet to get that act ascended to. It then exposes the market to legal risks. As we speak, we have got rules that are unpublished. We've got a market that's offering the services, and that exposes us to legal risks that are quite significant. And I think our plea would be to expedite the process in terms of the regulations and lawmaking for our industry. In terms of proposals, these have also been covered, Honorable Chair. I think I would just want to highlight SI 110. It has come and it has been received quite positively. The only challenge is that it has got a lifespan of 6 months. And for capital markets, 6 months is a very short term. we are a long-term industry that requires those that commit capital to make those commitments for durations that are longer than 1 year. So with an SI that only gives lifeline for 6 months, it makes it difficult for long-term players to come back to the market. Our plea is for a more permanent solution that goes beyond the 6 months that we were afforded through SI 110. So the provisions are quite welcome, but what we would need is a more permanent arrangement where we are saying capital gains is suspended indefinitely in lieu of the capital gains withholding tax, because with the scenario where the market was being charged capital gains withholding tax, and then on top of the capital gains withholding tax, a 40% capital gains tax. And we were contending to say administratively it's easier to just levy capital gains withholding tax, and we suspend the capital gains tax. And would welcome if that can be made a more permanent arrangement. I would also want to repeat the calls for government securities to be traded in the secondary market, which we regulate, in order to have transparency and also to support the players in as far as income is concerned. Some of the players highlighted that the regulator needs to be capacitated. We are a self-funding regulator, and we derive our earnings from the transactions that are in the market. If debt securities are added to the market, we will be able to augment our revenues and will not need to come back to the fiscus for support. So we reiterate the calls, I think, for government debt to be made part and parcel of the capital market secondary trading securities. Let me turn to the issues, Honorable Chair, that have been highlighted from the players. One of them is the issue of costs, which I do agree that the market at the moment is an expensive market, but that's largely when you are selling 2 items, and you can only sell 2 items, and you are supposed to live from only 2 items. The way you price the 2 items so that you cover yourselves for all the costs that you incur, and that's really the challenge. So we have got limited equities, we have got limited products, and the 225 institutions that I spoke about, including the regulator on top, are all feeding from equities at the moment. And as a result, they are all levying a charge on one product, and that makes it very expensive. For the cost to come down, we need to get more products that are also supported in terms of liquidity, so that we can lower the cost per product. So I do agree that the market as it stands is quite expensive, and that's because we've got a number of players that are feeding off 1 or 2 products, and that's not ideal. So the way the regulator would think is the way forward in terms of lowering costs is more market development, more liquidity, and then we can reduce the costs. Another item that came up, Honorable Chair and members, is the issue of virtual assets and what we are doing about that. So there's a committee, Honorable Chair, that is being driven through Financial Intelligence Unit, which is doing a risk assessment of the country in terms of virtual assets and how our citizens are interacting with this product. Once that risk assessment has been finalized, recommendations will be made in terms of how we'll move forward as a country with regards to the adoption or otherwise of virtual assets. So there is work that is being done. We want to have a research-based policy. So FIU is spearheading that exercise, a risk assessment is being done, and from that risk assessment, recommendations will be made in terms of banking sector, capital markets, how we embrace or deal with virtual assets. So that one is in the pipeline. The other one, I think, is probably for the committee, the issues of policy consistency. I will not comment on that one, honorable members. taxes, I think it boils down again to what I've indicated, that with the right incentives, I think that's what probably would add to say, as a capital market, I think treat us like any of the major sectors. Look at it like it's agriculture. If you want agriculture to thrive, we have seen, I think, the support that is given to farmers in terms of subsidized inputs. I think it's the same way that the industry will probably thrive with incentives that make our cost of service to be lower, with the incentives that makes the products to be cheaper. Those would welcome incentives, and those would definitely lead to a more vibrant industry. I highlighted the taxes that used to prevail prior to 28 June, capital gains tax of 40%, capital gains withholding tax of 4%, and those contributed to the market being expensive, but those have been suspended, and we do welcome that suspension. All we would need is probably for it to be more permanent. There were comments on exchange control regulations, which I will also not delve into, but to highlight that if those can also be relaxed, particularly for investors that are on the ZSE. On VFX, it has got a more flexible exchange control framework, but this is not the same for ZSE and FinSec, or the local currency platforms, where we also want foreign investors to participate, but they found it difficult to repatriate their funds. So a more flexible exchange control environment would definitely be welcome. Honorable Chair, I think I've exhausted my own issues and those that might have been raised from the SMIs. Thank you for the opportunity.
Yeah, thank you so much, as a committee, I'm sure we really got a lot of information. Some of the information are getting it for the very first time. We also thought that at some point we are going to invite the committee so that we are up to speed, especially with what you are doing. So let me take this opportunity now to lay all the presentations to the honorable members. I know a lot has been said, but at the end of the day, what we want as this committee is for us to understand the operations of the capital markets, the performance so far, what has affected the performance of the capital market, the policies, the legislation, as they have said, if there are any policy gaps, and then the recommendations. So we have had presentations. I will open this up where you have specific to say you would want CDC to respond, you be specific, and I will also allow all the stakeholders. I'm sure there are cases where we may not be able to direct the person to the right person, but the regulator should have the overall. Yeah, so let me open this up to the honorable members. We have got new honorable members that joined us later. Honorable Komberi, yes, yeah, if you can introduce yourself for a second. No. Yes, Honorable Komberi, yeah, we'll start from Honorable Komberi.
Thank you very much. Mayor Mpomo from North Province, PR. I'm within this comment.
Thank you.
Good morning, Chair. Good morning, everyone. Good morning, honorable members. My name is Tinashe Mshipe, Member of Parliament for Matabele South constituency, and a member of the Budget Finance Investment Promotion Committee. Thank you.
Thank you, Chair. Good morning, everybody. I'm Komberi Janatsiwa, Member of Parliament for Mashugo South constituency, and I'm also a member of Budget Finance Committee. Thank you.
Yeah, thank you so much. Yeah, it's now open, honorable members. We can start. There is a lot to be said. There is a lot happening. I feel we need more time, but let's just try what we can manage within the time frame. There is a lot. Honorable Mansari.
Thank you very much, Chair. Thank you very much, all the presenters for a very insightful presentation. Yeah, I think what is important for me to understand is the cost structure or the transaction costs that are suffered by investors. Because I'm hearing people complaining about the costs are too much, the transaction costs are too much, their fees, things are tough, investors are not coming. So can you just give us a brief, maybe this question cuts across all the so that it saves time. Because the eventual one was the capital gains tax of 40% was exorbitant. I would like to agree with you. But now that the minister has issued a directive or an SI 110 to the effect that you are suspending the 40% up. So it means a lot of them are paying tax as a capital, the whole capital markets are not paying taxes. Is that the correct position? If not, can you just give me the brief transactional cost that you suffer to say an investor faces this, so that it becomes justifiable to say, let's scrape off that 40% completely. Let's reduce permanently the withholding tax from 4% to 2%. Those are my submissions, Chair, for now.
All right. Yes, honorable members.
Thank you very much, Honorable Chair. To CDC, transparent information disclosure. How do you ensure timely and accurate disclosure of financial information from your listed companies? One. Number two, how do you evaluate the performance of the listed companies?
Thank you so much, Honorable Chibanya.
Thank you so much, Honorable Chair. Mine is just a very simple one. I've had all the challenges that you highlighted, that you've been facing as an industry. Mine was just to understand if there are any inputs that must be made in terms of engaging the government so that at least in the day you can dialogue and maybe possibly create a platform to actually then discuss all the challenges that you're currently facing such that they can be addressed and maybe possibly eliminated and possibly the market can be viable again. Thank you.
Thank you so much, Honorable Sam.
My question is more to do with what Honorable Tibanya just said. Anyway, but I just wanted to find out, are you having interactions on a free platform with the Ministry of Finance? And if ever, have you ever had it? And what was the outcome?
Thank you so much. Any other submissions? Yes, Honorable.
Yeah, let me just give the questions back again. They answered at once. The other question goes to the issue of directly to generated value deposit institution. How do you deal with unclaimed shares? Assuming that there is no longer a good record of what transferred, because some shareholders may be so little that you might not have a record. How do you deal with the issue of unclaimed shares over time? That's number one. And the second one, what are this cuts across everyone, every stakeholder. What are the common funding activities that are faced by that normally arise in the capital markets, which are not speculated? Speculation is, as we are aware, are there other common funding activities that normally takes place, and how to deal with them to protect investors? The other question is the issue of immobilization or mutualization, that is directly related to the issue of gender type. How are you going to deal with I appreciate the move because we cannot avoid the issue of digitalization part of our life now. How are you going to deal with other people who are not able to use those platforms? Is there education platforms? What are you doing exactly to try to educate the people to to uptake this program. Then probably the last, what is the current market capitalization of Victoria Falls Stock Exchange? And probably to check on the foreign investor uptake. The foreign investors are taking or trading more on the Victoria Falls Stock Exchange. I have noted with concern this year a couple number of companies, including Insco, Adenka, Edgar, have actually left the Zimbabwe Stock Exchange, the traditional stock exchange, going to the Victoria Falls Stock Exchange. What do you think we can do to at least try to make the Zimbabwe Stock Exchange a place of choice for most investors, regardless of the issue of consistency? Do you have any other promotional activities or promotional campaign or some sort of promotion that can actually lead to the uptake of investments on the Zimbabwe Stock Exchange? Thank you, Chair.
Yeah, thank you so much. We will go to the next round, but let me allow our stakeholders to respond. But please try to be as brief as possible. We still have quite a number of persons and we are running short of time.
Perhaps I will start, Chair, on the issue of the costs and whether the market pays taxes. So I want to break down the cost of investing. When an investor comes and they want to buy shares, there are costs which they are being charged. One of them is brokerage, 0.92%. Then on that brokerage, there is VAT, which is charged at 15%. So 15% of 0.92 is chargeable as VAT. Then there's stamp duty, which is a government tax of 0.25%. Then there's, which the players also think is a government tax, there's a commission levy, which goes to the regulator of 0.16%. That's on the buy side. Then on the sell side, if that same investor then now wants to sell their shares, the other cost of buying will be a ZSC levy, 0.1%, CDC levy, depository levy of 0.1%. I think that makes up the total cost. On the sell side, it's the same brokerage, it's the same SEC levy, the same VAT on the brokerage, and this is where then there was a 4% capital gains withholding tax. If you were to add all the costs that goes to the broker, the depository, the commission, they were less than 4%. So capital gains withholding tax on its own was almost 64% of the total costs. This is, so capital gains tax on its own made up more than half of the cost. And this cost is not found in other markets. So we are also competing for, like you rightly say, we also want to measure how much foreign investors are coming in or out. If we compare our costs with the other jurisdictions, now with the reduced cost, our total cost is 5.14%. South Africa is 1.41%. We are at 5.14%. South Africa is 1.41%. It's almost 20% of our cost. Mauritius is 2.15%. It's less than half of our cost. Zambia is at 2.75%, almost 50% as well. Botswana, 2.86%. Again, so these are the regional peers that we are competing for the same foreign investor. So that's why we say our cost is expensive. It's in comparison to other jurisdictions, and then just looking at the impact of the taxes in the cost structure as well. That the tax elements make up more than what the players were actually earning. So the market pays taxes, there's VAT, there's stamp duty, then there's capital gains tax. So it has been reduced from 4% to 2%. And so there's 3 taxes in the cost structure that the market is still paying. So to respond to you, the market still pays tax, but at a lower level. Then there is the other one which I wanted to also come in is the issue of unclaimed shares. So this is actually being handled through the Commission and the Investor Protection Fund. We actually carried out a campaign to try and notify those that invested before that they could have the shares. So we published the names of all the shares that were unclaimed from previous regimes. Chimbeteza is only playing a custodial role of these shares. Their role is just to keep the shares for us, but otherwise we are the ones driving the campaign to try and alert citizens that there are shares that have not been reconciled with their owners, and we have received quite a positive response in terms of that campaign. We only started it, I think, a week ago, but the response has been quite positive. Their role is just to keep the shares, otherwise the Commission is not driving the unclaimed shares campaign. I think on the issue of speculation and protecting investors as well, if I may come in there. So speculators, these are your investors that come in for short term. It's the term that might be misconstrued. Speculation per se is nothing. There's nothing wrong ideally for it. It's just that this is a short-term investor, as opposed to investing. The general term, then when we say investing, is someone that comes in for a longer term, and these are your typical pension funds, insurance companies that have got long-term liabilities. Individuals normally don't have patience to wait for more than a year, and these are the ones that are then badged as speculators. Their influence on the market is quite limited. So retail investors on the market is less than 1% currently. 99% is your long-term players. So their influence is quite limited. But they can create bubbles from here and there, but their long-term impact is quite muted because their contribution from the statistics that we have is that they are contributing less than 1%. Otherwise, 99% of the players on the market are long-term investors. So how do we protect investors? This is why then we have got a regulator. So the regulator provides plays oversight on all the players. We are the ones who register them. So we vet them as they come in, and then we monitor their activities as they offer their services. In terms of the Securities and Exchange Act, we also sanction them. We also cancel the licenses. If we want, this year alone we've cancelled 7 licenses, 1 asset manager and 6 financial advisors. We've also penalized more than 11 institutions, monetary penalties. We carry on-site and off-site assessments. So the investor protection side is done by the Commission. And some of it we work with key infrastructures, for example, the stock exchange. They installed a surveillance system which helps us to monitor the activities of the stockbrokers. So it's an automated platform that can, bring alerts depending on how you configure them. If you want to see if there's insider trading, market manipulation, we have got a system now that has been installed on the ZSC that can help us to flag all those activities. On the collective investment side, we work with trustees. So trustees are appointed for every collective investment scheme, and their role is to ensure that the rights of the investors are protected. So we work with trustees as well on the collective investment schemes. We have got what we think is a very watertight regulatory model for our capital markets. But let me end there, Honorable Chair.
Yeah, thank you so much. Yeah, for the other stakeholders, please make sure that you keep it short because we still need to go to the second, if not third round. Yes.
Thank you, Honorable Chair. Most of the questions have been responded to. by the Securities and Exchange Commission. Maybe the number two, evaluation of listed counters, that one I will leave to the ZSC to come in. But on a transparent information disclosure, I think this also is a function of the issue that we talked about, wherein if everything is dematerialized, you then have that single source of information. And in terms of the shareholding caps, that maybe an individual cannot hold up to so much, or that, so it's just one single source of information that is authoritative. So yeah, in terms of the closed periods, you can then be monitoring the alerts that he was talking of, can then actually be coming up as trading is actually happening. And even in terms of the other information to do with the requirements, maybe by FIU, that system, central system, can then be able to tell you, and you can extract that information as you see fit. So yeah, the central depository information, central securities depository is quite key in terms of this transparent information disclosure, but depending on the information that you feed into that. If you have maybe a significant portion of the counter being physical, it then defeats the purpose, because you are only privy to a certain portion, but not to the entire maybe share register. So that's the only number one, but then colleagues will come in detail on that. In terms of common fraudulent activities there, I'll just mention to say the transformation that happened in the capital markets, wherein we went electronic, has really closed the loopholes so much. Just like the transformation that happened in the banking sector, wherein you used to go around with your passbook, then figures will be entered into that passbook for you to do withdrawals and so forth. Now it's just a knowledge that I have a balance. It is integrated of so many delta shares, equal shares. And in terms of the KYC, it's so comprehensive that no one can really transact maybe on your account and pretend to then maybe represent you. Everything is now so watertight that fraudulent activities, they've really been far, and in fact we have not actually witnessed any incident where someone then says, no, I've lost my shares, someone sold my shares and money then went to the other person. In fact, what you can only instruct is for you to sell, but in terms of where the proceeds of that transaction go, it's already in the system, so you can sell on behalf of someone, but someone, that owner, very owner of the account, is the one that is going to receive the funds, the proceeds of that transaction. You know, the third-party restrictions that were then instituted. So I will just end there, because most of the issues have actually been responded to. Thank you, Honorable.
Thank you very much, Chair. So I think I'm just going to reiterate what our regulator said in terms of transaction costs. I want to make it very clear. The majority of the transaction costs are government related. So almost a ratio of almost 1 to 2. So I think just to make it clear. What the people operating don't get much of the money, much of the cost of government. And I think in terms of the information for the listed companies, we regulate the listed companies in terms of the financial information that they provide. So they have to provide audited accounts, they have to do half-year reports, they have to do trading reports within a specific time period. If something material happens, they have to notify the market. If you notice your newspapers, you'll see that they publish these accounts in the newspapers, they publish them on their website, and they publish on our website as well. So there's a lot of monitoring that happens behind the scenes to make sure that the public gets information on how the companies are performing. Then I think in terms of the FX, in terms of how it's trading, I'll leave it to my colleague. But in terms of ZSC, what we are doing to make sure that ZSC is viable. So ZSC is a very important market to us. We want to make sure that it's been around for 100 years, and we're hoping that it stays for another 100 years. And there are three main things that we are doing in terms of making sure that it remains viable. So the first one is that we are doing a lot of free courses to companies that possibly could list on the exchange. We did one this year, which went very well. We will continue doing them. So we get people who train these companies what it means to list, how do you list, what are the advantages, the costs and everything. So that's a big part of what we're doing to attract new listings on the exchange. Then the second one is in terms of new products. So there are products like REITs, which is basically getting a property, unitizing it, and getting listed on the exchange. It's something that we have launched, and we've got 2 REITs that got listed on the stock exchange. And also ETFs as well, where you collect shares and unitize them as well. So the new products is a big part of what we're doing as well to grow the Zimbabwe Stock Exchange. And the last part that we are putting a lot of effort is to get debt on the market. So we like it that the SIG is stable, and if it remains stable, it becomes attractive to this debt. So we want to make sure that private sector can come and raise debt on the market. Then especially government. We are doing a lot of talk to government to convince them that when they want to raise money, especially in SIG, they can come to our market. So I think our combination of trying to get new players to come in by training them, secondly, new products, and I think thirdly, trying to get debt into our market. We are confident that whatever the transition of movement from ZSC to DFX, we believe it's likely done. We don't see it happening so much into the future. But in terms of DFX, I'll leave it to my colleague to talk about it.
Yes.
Thank you. So in terms of FX trading, I think what we have seen is just an upward trajectory in terms of the volume and the values of trade. And in terms of the market capitalization, as yesterday, the market cap for VFX was 1.266 billion. Just to add in terms of the costs associated with trading.
Yes.
US, yeah. So in terms of the overall transaction costs on VFX, it's 2.304. Split as the buying side is 1.277%, and the selling side being 1.027%. But we are happy with the numbers that we see on a monthly basis now. We are averaging about 4 million from November last year, and that trade is we think it's good. Thank you.
Yeah, thank you so much. Yeah, so let me go to the second round of questions. Some questions. The CDC, I know the regulator will also come in. I wanted to find out how developed the derivatives market is in Zimbabwe, especially if you look at Zimbabwe against its peers. And then you mentioned the issue of the debt market for the government, and it appears like it's not developed. What might be causing this? Because for us, we expected that the capital markets, this is where the government is supposed to raise its long-term capital. Like now we are seeing the construction of roads. Government is making use of the budget, and we see that it's not sustainable. Why is the government failing to raise capital from the capital market? And then there is an issue which you mentioned about the fast legislation. I think for us as a committee, we would have wanted to, in terms of the legislation that is there, where do you think, like, this is the act where there is need for amendment, this is here there is need for a new act altogether. I think there is need for you to be clear on that. Then the FinSec, you seem to be very happy about new products. And you mentioned that with the robust product innovation. And I was just thinking, which ones do we have? Do we have new products in the market? And then you bemoaned the issue of not having freshly was saying, as the capital market, are you not having relations with the external banks? I've seen other institutions now, they are going into collaborations with the external institutions. Are you facing challenges in having those collaborative arrangements where you can also access funding from external institutions? And you also beyond the issue of declining pensions and savings. And I think this is a confidence issue. What is the market doing to ensure that you restore market confidence? Because once it is gone, like where we are now, I think it is not going to be easy to gain it back. And then the investment banking, where you said it has been delegated to some table in commercial banks. Do you think we need to go back to our original format that was there, where we used to have proper investment banks? Now it's diluted. Everything is diluted, and it appears like greater emphasis is now on commercial banking. What is your proposal on that? Then you also mentioned the issue of fiscal incentives. I think we've got a problem here. We want the government to raise revenue, but at the same time, we're also telling the government to offer fiscal incentives. Don't you think that fiscal incentives, they compromise fiscal policy? Because we still want government to raise money for the budget, but we want it to forego revenue. How do we balance? Because seemingly everyone is saying government should give fiscal incentives. Then on the sexism, you said no IPOs. What was that one? Westcom.
I think less than 10.
Yes. Yeah. Maybe you may need to let us know why it was so under subscribed. And then the issue of new products. Then let me feel this again. Say something. Securities and exchange. You mentioned the issue of rules that are not published. And you say this exposes the market to legal risks. And primarily it is because of the long process that it takes for the new products to be approved. It goes to Minister of Finance, then to the Attorney General's office, and then it takes years before a product is approved, which then brings in the role of the Attorney General's office and Minister of Finance. Surely, when you've got cases like that, this is where you need your committee. And we wanted to know if you've got any products that are there, and what you think we can also do as your committee. And then how developed is our secondary market? And, yeah, I think for now, this is what I can say. Honorable Mushiba.
Right. Thank you very much, Honorable Chair. I think you took some of the questions out of my mouth. So maybe I'll just rephrase one. Directed to Chingetai Depository. So in the presentation they spoke about streamlining policies. So I wanted to ask them if they can specify and give examples of the specific regulations or policies that need to be streamlined. So I think this can help the committee to better understand. Thank you.
Yes, Honorable.
Thank you very much, Chair. My question is directed to CDC again. So in as much as risk assessment is being done by financial intelligence unit into the adoption of cryptocurrency, as you
actually alluded to Zimbabwe being in a position to be ready for virtual currency trade. To what extent is the CDC infrastructure prepared to hold cryptocurrency transactions, as well as identifying legit and fraudulent cryptocurrencies that may be traded in the virtual market, as some investors are actually losing a lot of funds on schemes in the guise of cryptocurrency. Also to FinSec, particularly I want to talk about is ZMX. What effort is being done to allow smallholder farmers in remote districts to benefit from the exchange, as there may be disparities that may exist between the prevailing prices in Harare and those prices that will be prevailing at the designated holding warehouses in their provinces and remote districts. Thank you.
Yeah, thank you so much. Yeah, if you will make this count.
Okay, thank you, thank you. The first question, how developed is the derivatives market in Zimbabwe? This one I'll leave over to my colleague here, because he's actually doing something in that area, and I think he will add more flesh to the response there. The next question, what causes government debt instruments to fail, or what causes government to fail to raise capital on the capital markets? On this one, I think I'll just touch it briefly, but maybe Seiko will also add more. From our experience, we have actually done the rounds from the Reserve Bank of Zimbabwe to the Ministry of Finance in terms of that willingness or readiness to say our system is actually able to do secondary trading of government securities in the treasury bills. And what then is just required is maybe that willingness from government to say, let's put our TBs on the Chengetedzai to facilitate secondary trading. So that decision has been very hard to come by. Several reasons have actually been profiled. One is that need for secrecy in terms of how much borrowed is the government. The other one is because maybe the Reserve Bank itself feels maybe they actually have an adequate system to cater for government securities, and what they are doing through financial institutions is adequate. Maybe they seem, I would say, the men in the street having little to contribute towards the viability or the creation of the secondary market for the government securities. I'll just end there. When we say faster legislation, where do you need amendment? Number one is on, you know, the market cost that was being discussed. When the market was really very down, when we could barely maybe raise funds to even pay our employees, there was that need, or there's that need for quicker review of maybe what then the CSD levy is, or for even the other market participants, so that for that period when it's really hard for the market participants, legislation then chips in to ensure the viability of the SMIs. So that's the critical area where we then respond. Maybe there's a certain calculation that is done, made by the regulator, by your committee or whoever, to then say, no, at this point in time, we can see that what is accruing to our SMIs is beyond the economic level. Let's review it for the time being until it then goes above a certain level. So that is my contribution on that. Visual assets, to what extent is the CDC system able to host virtual assets? Our system is really in use in Europe, in South America. In some markets, it's actually managing your virtual assets. So it's just a matter of us switching on to say we now are accommodating these virtual assets depending on the legislation that we have. But system-wise, we actually have a system that is very much capable, which is why earlier on I said we are barely using this system to its maximum. You see, so those are some of the areas where we can actually increase the use of the system that we have, the functionalities that we already have in the systems that we operate. Thank you. I'll just end there. Maybe my colleague add one or two, or he says it all. So thank you.
Thank you. With regards to the derivatives market, yes, we are making very good progress on that. The framework was put together, approved by the regulator, so we actually have derivatives framework in place. Then, as FinSec, on a pilot basis, we listed a couple of derivatives that are based on equities, just to get the market used to the concept of derivatives. And we actually do have active trading on the derivatives. This past quarter, we had about 200 contracts retail on the FinSec derivatives market. The values are very low because the derivatives market also is a function of stability in the currency as well as the pricing side of things in terms of option contract pricing, futures pricing. They are affected by the stability of the currency. So that is the challenge that we've been facing. The intention is to introduce derivatives to the commodities markets because that's exactly the ultimate goal. And with the liberalization of trading of maize and the like, we have a very strong case now to utilize the derivatives. So we are quite happy with the progress we are making there. Regarding the innovation, what innovations? I think the innovations has been both in terms of new products that we have seen coming up. So coming up with products like ETFs, derivatives, REITs, is part of the innovation on the product side. But the platforms underpinning those products as well, I think we've been fairly ahead of our peers in terms of platforms that enable the retail participants to participate just using their phones and participate on the capital markets. And we've introduced again a similar concept for SMEs to use a portal or a digital platform to try to apply for funding and apply for listing and be screened automatically. So again, it's an innovation that we think is new in our region or amongst our peers. We did have many other exchanges having similar. Then fresh liquidity, relations with external banks. Again, this is a function of our underlying fundamentals in the country in terms of how attractive our markets are to the foreign providers of liquidity. And what is needed is to ensure that there is robust banking, because we have been looking at these things as exchanges, but exchanges are by their nature are infrastructure providers. They require now participants who then take advantage of the infrastructure to go and attract capital, but the fundamentals need to be right. Declining pensions and savings. The challenge here is that the generality of the population, they will transact in a manner that they consider efficient, convenient, and inexpensive. So when you are competing with, pyramid schemes, when you are competing with forex trading, when you're competing where they don't experience some of the stringent requirements that a formal market brings in, that's when you have a challenge in terms of mobilizing savings. The key there is to innovate. This is where we are trying for virtual assets, digital assets, and tokenization concepts that we can embed on the existing formal markets and speak the language that the young generation is now getting used to, the Gen Z and all that. We need to use that language still on the traditional assets that we are looking at. But if you are trying to impose the traditional assets, the traditional way of doing things, they are bored, they don't have time, and we need to be modern. And that liquidity, we have issues with youngsters who are trading things that are outside the country. So they have the capacity, they have the forex, they have the access to push money and liquidity there. We want to harness that liquidity by matching those innovations and having them local. Investment banking, what needs to be done? I think the actual licensing framework needs to be looked at to see, because if someone wants to say, I want to set up an investment banking, obviously they are going to look at the banking license requirements. And just that the capitalization, which is structured maybe around a commercial bank and all that, may not be appropriate for a pure investment banking. We have a market where investment banking is actually licensed around the capital markets. So you go there, you see someone calling themselves an investment bank. They are a stockbroker, they are a financial advisor, and they are viewed as an investment bank. What they do is now to get a balance sheet that enables them to underwrite. What we lack here is underwriting capacity, which should be brought in by investment banking that is specialized. So a review of the policy and regulations and rules around how investment banks can be encouraged, can be facilitated, is very crucial if we are to have a viable primary market that raises capital. Because the products we have, everything we have, but what we are failing to have is the underwriting capacity, the advisory capacity, and the capacity now to go and talk to peer investment banking outside the country at the same level, not going as a commercial bank, but you are going as an investment bank. Then fiscal incentives, yes, it's a chicken and egg situation, Honorable. What we are saying on this is that you reduce a little to stimulate. So we're just saying it's stimuli that we'll be looking for. For example, we think the area of growth in terms of capital markets on the demand side, on the listing side, is SMEs, small and medium enterprises. We have very good enterprises that deserve to be listed on the capital markets. Can we come up with incentives that incentivize investors that invest in a category of SMEs to make them grow? You give up a little in terms of that tax to grow a bigger tax base. Can we incentivize and reduce cost of trading for the retail market, for example, so that that income that you are not having, where people were not saving, you actually bring it in by incentivizing them with reduced cost, encourage first-time investors by saying if you are investing for the first time, you are not going to be charged taxes and all that. Such little things that then eventually create more income for the taxmen going forward is what we'll be looking for. Then lastly, on the ZMX design is actually designed for the small farmer, wherever they are. The ZMX platform is actually available on a mobile platform, on a USSD. Any farmer anywhere in the country will enjoy the same price, with obviously the issue of transport costs and all that. The only challenge we have is that we don't have enough warehouse infrastructure across the country. That is what we need to focus on in terms of how we can ensure the warehouse infrastructure is where farmers are. Thank you.
Thank you so much.
Thank you, Honorable. I wanted to come in with regards to an earlier question which I had not responded to, our interactions with the Ministry of Finance and probably what has been the outcome. So we do meet with the Ministry of Finance quarterly, sometimes more than once per quarter. And I think the push for the past couple of years has been the review of the vesting period and the capital gains tax, which I think earlier on we did acknowledge that I think there was movement there. What we are probably just requesting for is probably a longer time, but the ministry has responded favorably on that basis. I'll allow my colleagues, I think, to also perhaps comment with regards to the work that we are planning to do on the legal side, the ministry, and probably what from their licensing, the work that they're actually doing on the digital assets, and probably where they are in terms of that, because I think our team is participating on that exercise that I mentioned earlier on.
Thank you so much. If colleagues can respond, we are just about to go to Parliament now. So, yeah, if you can make sure.
Thank you. I'll just comment on the issue of our preparedness in terms of issue assets. We did an invitation to the public to give us comments and input into the format. So what we have done is to collect all the information from the study that we made, and on the 31st to 3rd of August, we're going to meet both regulators, the law enforcement agencies, to analyze the results. After that, we will then be able to update the nation on the way forward.
But with regards to the amendments to the Securities and Exchange Act,
Thank you, Chair. On the amendments to the Securities Act, we are now aligning it with recent developments in the market, and we will resubmit the amendments to the Ministry of Finance. And in relation to the publication of those for the exchanges and the CSDs, our engagements with the Ministry of Finance have been very fruitful, and the Ministry of Finance is assisting us in arranging workshops in the AG's office so that we speed up the process of drafting this. We reckon the AG's office is overwhelmed as they draft rules for all sectors. So what we may request today is further capacitation of that department.
yeah, thank you so much. Yeah, I'm sure as we do all those processes, you also need to engage your committee. Because I think at the end of the day, it is this committee that is going to do the debate here in balance. So, honorable members, let's go to the last, if you've got 1 or 2 persons, and then we'll close. Honorable Martin.
Thank you. Maybe the last question. I overheard a point to the effect that foreign investors are finding it difficult to invest in the local market on the basis that the Foreign Exchange Control Act does not allow such things. There are some regulations in the Exchange Control Act that does not allow that freedom of movement. Which positions do you want that act to be amended so that maybe we can take that one to the minister? I think it will speed up the process.
I will respond and perhaps the change will come in. So it's not necessarily the act. I think it's more to do with the availability of foreign currency for foreign investors when they want to move out. So if you recall, I think since 2018 we had an auction system which was then moved into an interbank, but there were also trials at some point, depending on the priority, and the result was that it was just difficult for the foreign investors to remit their funds out. That was the challenge. I think what is then being issued were those blocked funds, which they've been warehoused, but they are not accessible as yet. That's the main factor which sort of then makes it difficult for foreign investors to bring in new money. So it's largely to do with access to foreign currency and foreign investors wanting to move out. So I don't just move on to it.
I think I just wanted to agree with the regulator. So there's just a few administrative issues on the side which says that you have to prove that you brought the money in the first place, which is expected. But the issue is not that exchange control, is the availability of foreign currency. So you sell your shares in ZIC on the ZSE, then you want to go out USD or pound or whatever currency you want. How available is that currency? That's the issue.
Yeah, thank you.
Thank you so much, Chair. I got to believe, or if anything, if I heard correctly, it appears Reverend Apira was actually bemoaning the fact that of late there's been some challenges as far as what they call it investments on the capital markets due to currency instability. My question is, what are you guys actually doing as players in the industry to actually then help the government protect, insulate, and sustain the current stability that's actually in the country right now? What are you actually doing to actually help enhance that so that at least we can sustain it? Thank you.
Yeah, just to allow you to take all the questions at once. Yeah. I think this one is for CTC. You have said you would want the investors to dematerialize. But you are also saying you would probably want an increase in deposit fees.
Yes.
And normally the impact of that increase would cause people not to dematerialize. Do you think this is a contradiction? Then in fintech, you spoke of tax incentives. We probably want you to be specific. What exactly are you saying? Then the issue of policy inconsistency. Which one specifically? Where do you say there is policy inconsistency? And the level of participation by the general public, you mentioned it 1%, 2%. What are you doing in order to ensure that the level of participation is high? Why is it low? And as a market, do you have capacity to fund big projects? You said the government is not participating, but do you have the capacity? And maybe the last one is on, I think we used to do it together on FATF, the one for money laundering and the counter-funding for terrorism. Are you doing enough to make sure that you are compliant with FATF rules? And the vision for the sector. How aligned are you to vision 2030? Thank you. The last question. Honorable Congress.
Thank you, Chair. I just want to check from what was reported by Zimbabwe Stock Exchange that there was an increase in the SSA index as 50%. Is that of the local currency securities or for both the forex securities? And can it be attributable to local currency stability or other market factors? Thank you.
Thank you so much. So let me give you, let's start with you and then we finish off with the regulator.
Thank you. I'll respond to the one where dematerialization and increase in fees isn't that contradictory. Yeah. So it's a delicate balancing act to say your market infrastructures need to be operating viably, and at the same time you need to ensure that in terms of the overall cost, you are not then pricing yourselves out of the quotation with maybe SADC and so forth. So yeah, it's which is where now we then said, no, we need faster a response to say this is a dynamic situation. SMIs are struggling in terms of funding, maybe even systems, licensing, staff for salaries themselves. What do we do in the interim so that there is that dynamic response, so that you simply ensure that there is that continuity, that the investment that we've done in terms of the systems is then not eroded to the extent where we can operate that infrastructure for the investors. So it's a delicate balancing act. Yeah. Thank you.
Thank you. Yes.
Thank you. On the tax incentives, some of the examples encourage thriving SMEs to list, and if they do list, any SME that can list may be given, say, tax holidays or reduced tax holidays for a couple of years after listing, and the return to the taxman is that you are encouraging formalization of SMEs that otherwise would actually be evading that tax. So make it easy for them to come in by encouraging them and reducing their tax requirements. Then on the other side of that SME that is listing, you then encourage, because there's also fear from investors, they fear SMEs, and what government can do to instill confidence is to say there are tax incentives for an institutional investor that supports an SME that goes the listing route, so that you then incentivize large institutional investors to also apportion a part of their investment portfolio to SMEs, and in return they recoup on the reduced tax. To the investors, we think we would like to build a very strong base of retail investors. Can we reduce barriers to entry for them by actually waiving taxes maybe in their first year of investing, or for the first investment, or when they participate in any IPO, then they can be recognized and rewarded from the fiscal side of things. The reason why we keep talking about fiscal, especially for retail and SMEs, is because for the private sector to do it, it is not very viable. It is very expensive and the return is very low. So therefore, this is a kind of a public good that may not necessarily be profitable, but it has an effect on the macroeconomic side of things. So that connects to the level of participation that you also asked. What are we doing? We do have a lot of programs. We do have a lot of ideas, but how to get them to reach the intended audience, how to have a budget for us to reach all the corners of the country as a private entity, it may be very difficult because the resources may not allow. So a government taking that lead and making such announcements will now enable the private sector now to ride on that and now effectively communicate the message. Is there capital market capacity to fund projects? I think it is a function of making the first step, and it doesn't have to be huge amounts. It has to be just a signaling effect. We are only selling this small percentage, and we are doing it on a sort of phased basis. And once the confidence comes in, you then attract a lot of attention, both local and foreign. But the starting point and the signaling of the government to say we have this intention will enable the capital markets now to package the product in a manner that is attractive. Thank you.
Thank you so much. Yes, Mr. Boyd.
Okay, I'll just touch on three issues. I think the first one, in terms of what we are doing as capital markets for the stability of SIG. If you look at it, the Zimbabwe Stock Exchange, or the capital markets exchange, is one of the few places where you can buy assets with SIG. It's difficult to buy a house with SIG. It's difficult to buy a car with SIG, but you can buy shares of Delta, OK, all those places with the SIG coins also. So we are very good in terms of SIG being valuable and being a preservation of value. And that's why we are fighting very hard to have a debt market with SIG, because now you can gain interest. So it's more certain in terms of what return you can get on the SIG. So I think we are very good in terms of the stability of SIG. And in terms of policy consistency, I'm aware that the government is going through a transition. The government is trying a lot of things to make the economy work, to stabilize the currency. There's a lot of things that they're doing. And sometimes they try something and change it. So unfortunately, when you do that, sometimes it comes on the other side as policy inconsistency. I'll give an example, one that really affected us. I'm speaking on my behalf in terms of the Telephone Stock Exchange. One of the things that came up, what was important when the FX was being started, was to allow 100% retention when you list on the Telephone Stock Exchange on the new project that you're doing. So what happens, companies listed on the Telephone Stock Exchange wanting to raise money to do new projects. And 2 or 3 months into that program, it was taken away. And people had gone overseas trying to raise money on that. That comes out as policy inconsistent. And it's very difficult for the capital markets because people will think of long-term projects based on that policy. Then in terms of the 60% gain on the exchange for July, the market has been with doldrums for a while now, for maybe a year. year. I think this is the first time we were seeing real valuations coming in into the market. Simply, to say it simply, our market is too cheap. If you ask anyone who knows about the market, or market will tell you our market is too cheap. So what we're seeing now, we're thinking that it's a reality of the market. And part of it is liquidity, because we're a local currency market. There was not much liquidity in the market, especially April. There was very little SIG in April, even May. There was not much. So I think the SIG that is inflow now is coming to the market. There's more liquidity and more relative exchange. That's our answer.
Thank you so much.
Thank you. Allow Norman to comment on the issue of FATF and how compliant we are. But let me take on how and what we are doing perhaps to align our market with Vision 2030. So the Ministry of Finance is spearheading, I think, a financial sector strategy, which we are also part and parcel of. We are represented both the steering committee and at technical level. But as a market, we actually initiated our own project to develop a capital market development strategy, which was going to point towards how we want our market to contribute more towards the economic revival and funding. I think the SMI has also spoken a number of the products that we have managed to facilitate to be brought in. So if you look at financial inclusion, we have broadened the products that are available in that space by adding REITs, which give retail investors exposure to property. We have also broadened their exposure to ETFs, and in ETFs they can have exposure to all kinds of assets, including gold and foreign listed equities. So we've tried to broaden the products for the retail market through our collective investment schemes. Even liberalizing the market, I think we now have got 4 exchanges to try and make them compete and do more in terms of funding and being alternatives for capital raising. So from a regulation perspective, this also speaks to the amendments that we are working on in terms of the Securities Act, is to try and accommodate the new products, try to align ourselves with modern ways of doing business, and want that to be captured through the amendments to the Act. But more so, I think, is the work that we are doing with the Ministry of Finance in trying to come up with a financial sector development strategy. Let me allow Norman to comment in terms of the AML and what we are doing to enforce compliance.
Thank you, Honorable Chair. So, FATF stands for Financial Action Task Force, which is an international body that sets standards for all issues. So I think it has issued 40 recommendations across the world, where Zimbabwe is so far complied with 47 of those 40 recommendations, which make us the second country in Southern Africa to have complied with the 40 recommendations issued by FATF. First one is Mauritius. So I'm happy to say that we managed to domesticate our laws in line with the 40 recommendations. So what we are now focusing on the effectiveness in terms of these laws that we have domesticated, to ensure that the institutions and players have policies and procedures, and are also complying with what we call core issues for the living community outcomes that we need. That's the objective.
Thank you so much, honorable members. I think this brings us to the end of this session on the oral evidence on performance of the capital market. Our stakeholders, Mr. Ndorogodo, thank you so much for coming. Mr. Montalinga, thank you so much for coming. Money, thank you so much for coming. I think what we got today is going to assist us when we then engage Minister of Finance and any other stakeholders that you might picked up from your presentation. Because at the end of the day, for us, we want a capital market that is vibrant. We want a capital market that is going to add to the development agenda as set out in 2030. So the Attorney General's office already picked up that they are also supposed to play their part. So this is going to assist this community to make sure that as a sector, we are going to contribute positively to the development of this country. So we give you otherwise we want to thank you so much.
Thank you, Chairman, and thank you, members.
Thank you.